To discuss question June 2018 question 3, which is on MFRS 108. So I hope you have the question with you and you have attempted at least halfway through by referring to other past sem question that I've given you. Remember, MFRS 108 is on accounting policies, changes in accounting estimates and errors, and that is very important MFRS because whenever a company do not treat their whatever accounting treatment according to the standards, MFRS 108 is the one that is prescribing what to do or how to treat it. Okay, so let's look at the first part of the question, which is question 3A. You have Dapur Cantik, a manufacturer of kitchen utensil, and the company has decided to make several changes to continue with the present practice with a view to improve reliability. So this is one of the most important item that a financial statement must possess, which is show a reliable financial statement, as well as the information must also be relevant. So those are the characteristic of the financial statement that must be available: relevant and reliability. Among the issues discovered were, so before we read or we go through the question, let us look at the requirement, what you are asked to actually do based on the above situations. So you have situations, four situations there. You are to state whether or not each of the above situation is a change in accounting policy. Remember, you are asked to just state. You don't have to explain, or maybe a change in accounting estimates, or just to state whether it is an error. You may have to also, classify whether error is a prior period error or current period error whenever possible. But here we have to read the question first. That was for 4 marks, where each of the question is just 1 mark. So the first one, you have the rate for allowance of impairment of trade receivable was changed from 5% to 6%. So class, this is change in accounting estimates, change in accounting policy, or error? Which one? Change in accounting policy, change in accounting estimates, or error? Yes. Why change in accounting estimate? Because there is a change in the carrying amount of the trade receivable once you change the 5% to 6%. So therefore, the carrying amount of the trade receivable will also change. So the first one is change in accounting estimates. You got it right. Congratulations. And the second one is about the internally generated customer list. Okay, this one is actually for the situation under MFRS 138, the one that you will learn next semester. But for your information, any internally generated intangible asset is not to be recognized as intangible asset. So next semester you will learn, but here, since the question already mentioned about this, we still will try to do it. And it is wrong actually to recognize the internally generated customer list as part of the intangible asset. Intangible asset is also non-current asset, but it does not have physical form. That one will be covered next semester and FAR270. So the second one is actually what? Change in accounting estimate, change in accounting policies, or error. Anyone would like to try? Adam, Hafni? What do you think, Adam? This one. Adam, are you there? Adam is not there. Are you present, Adam? Okay. Hello, Adam. Is it change in accounting policy, change in accounting estimates, or error? I just mentioned something just now.
Changes in accounting policy.
No, Adam, it is not change in accounting policy. This is an error because I mentioned that you cannot recognize. So it's okay for you to make mistake. Do you know why? Because you have not learned this part yet. But somehow this was the old question. And during those days, MFRS 138 was also taught in FAR 270. But now no more. It was shifted to FAR 320. Okay, next one, number 3. The measurement of property, plant and equipment was changed. So here is about changing the measurement basis of PPE from cost model to revaluation model. Okay, for this question, I would like to call Arina Balkis to answer. What do you think is the answer, Arina? Is it change in accounting? Yes, Arina.
Change in accounting policy.
Very good. This is change in accounting policy. What is the reason, Arina? What is the reason? Why do you say change in accounting policy? I give you the tips, right?
From cost model to revaluation model.
Yes, and that is because of change in measurement. Change in measurement, change in recognition, change in presentation and disclosure, as I mentioned in the lecture. You can see that I gave you tips. If you can still recall, I gave you few tips to decide whether it's a change in accounting policy. So therefore, this is a change in accounting policy. Okay, the last one, the economic useful life of machinery was changed from 10 years. So this relates to machinery. Machinery is likely to be a PPE, and it was changed from 10 years to 8 years. So who would like to answer this part, or shall I just call Aslam? Aslam, what is your answer for this, number 4? Aslam, are you there? Aslam? Aslam maybe having internet problem, I'm not quite sure, or maybe has been kicked out from our Gmeet. So I will call Fatin Nabiha. Fatin Nabiha, are you there?
Yes, madam.
What is the answer for number 4?
Change in accounting policy.
Can you just rethink your answer again? That is not quite right, because the 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 hint is here from 10 to 8 years, and it will affect the carrying amount of machinery. So what is that? If that affect the carrying amount, it will be changed in? Is it changed in account?
Change in accounting estimate.
Yes, it is going to be changed in accounting estimate. So you got 4 marks for that. Now we go to next part, which is the question that gives you a scenario. And you have a company, Mars Berhad, which is involved in entertainment activities. So the principal activities of the company is providing entertainment. And you have the company that purchased a machinery for 1 million. So remember, machinery is a PPE. So if you purchase machinery, you should have debited the machinery and credited bank maybe on 1st of July 2015. Now, this is the date of acquisition. And economic life, or the estimated useful life of the machinery, is 10 years. So when you bought the machinery, you expect to use it for the next 10 years. Okay, and Mars Berhad also incurred import duties. Okay, class, from FAR 270 and FAR 210, you learn the topic PPE. So for import duty, are you going to capitalize based on your understanding, or are you going to expense off? Okay, Camila, can you answer that question? Import duties, shall we add to be part of machinery, or shall we exclude from the cost of machinery, Camila?
We should add.
We should add. Why, Camila? Why do you want to add? Is it because of, is it a capital expenditure or a revenue expenditure?
Because it is capital.
Yes. Yes, it's a capital expenditure. So the correct treatment is that by right, the company should have added the import duties to be part of the initial cost. So the cost here, purchase price is 1 million, and you have the import duties of 100,000. So by right, the total initial cost of the company is 1.1 million. And you have the information in the second paragraph. While finalizing the financial statement for the year ended 30th June 2017, and remember 30th June 2017, when you finalize the financial statement, for that year ended 30th of June, this is telling you this is the reporting date, and the current year ends also on 30th of June 2017. So if the current year ends 30th of June 2017, it starts on 1st of July 2016. So what was discovered is that the import duties were charged as expenses in 2016. So 2016 is actually the prior year. So I will show you the timeline in a short while. But it was wrongly charged actually. So because we knew that import duties should have been added to the machinery. But here it was wrongly charged, right? So the accumulated depreciation was also improperly treated. Why improperly treated? Because the depreciation was charged here. However, it was under-provided. Why under-provided, class? Because the expenses has been over-provided for the import duties, whereas import duties should have been added to be part of the initial cost. For that reason, depreciation has been wrongly calculated, since it has been calculated based on 1 million instead of based on 1.1 million. So I'll show you here. Yeah, so you have this timeline. You can see here I draw a timeline. My advice is for you to draw a timeline. So this is the beginning of the prior year, 1st of July 2015, and this is the end of the prior year, 30th of June 2016. This is our current year end, 30th of June 2017. This is the prior year, and this is the current year. So let's see what happened. Machinery was actually 1 million, yeah, the purchase price. And there was an import duties of 100,000. However, the error is that import duties was treated as expense. So therefore, the machinery was understated in terms of the cost as well. Do you understand me, class?
Yes, madam.
Okay. Next one is that you discovered that the error where the capital expenditure was treated as revenue expenditure somewhere at the end of the year when you finalize the account in the current year. You discover that you made that error, and that was a prior period error that you discovered in the current period, and that has caused few things to happen, which is depreciation to be understated, expenses for import for the company has been overstated because the import duties are being charged as expense. And at the same time, you would also notice that the information here gives you on the retained profit. You can see here. So if you see, the retained profit is somewhere here, retained profit brought forward. It is 3 million. So that 3 million also has been improperly treated. Why? Because that has charged a depreciation, but somehow it has been charged with an under-provided depreciation. At the same time, the retained profit also has been wrongly computed, since the import duties was actually being included as part of expenses, and therefore reduce the retained profit. So those are the mistakes that had taken place. So the effect is that you have wrongly recognized the accumulated depreciation, and therefore the retained profit also has been understated. Why? The reason, one of it is because the 100,000 import duties were already being added to arrive at the retained profit. So when you have more expenses, class, you will see that the retained profit will go downwards or will decrease, and that has to be rectified. So you are asked to explain the proper accounting treatment to rectify the situation. So my suggestion is, before you explain, you must understand the situation. So we need to go and give the proper accounting treatment when in the prior year. So you need to go and explain what is the correct accounting treatment in the prior year, because that affect the prior year as well as the current year. So here this is on prior period errors, and we have you may have noticed there is a prior period error. Why prior period error? Because we discovered prior period error that was made in year ended to 2016 in the current year 30th of June 2017. So that was a prior period error. And from what you have learned, you may notice that prior period error, the first sentence that you must write is that prior period error should be adjusted retrospectively. My suggestion is, if you are having problems to write the answer in words, you should also perhaps start doing your journal entry first. So why not we do the journal entry, then we come back to the explanation, because sometimes with the journal entry it will help you with the explanation of the accounting treatment. So now I'm going to do B first, then I will go back and do the explanation of the accounting treatment. So number one, just now we were telling you that we understood that the machinery has been understated because it has not been added with the 100,000, and it was only recorded with the 1 million, right? So what you need to do now is you need to go and rectify the capital expenditure, the import duties that was wrongly expensed off as revenue expenditure. Now you need to go and rectify them as capital expenditure. So you go and debit to the machinery, meaning that you go and add them to the machinery, and you will credit retained profit brought forward. The reason that you credit here is to reduce the import duties. Why reduce import duties and you treat retain profit to reduce it? Because this was last year. This happened last year. Remember, I mentioned import duties was already being deducted to arrive at the retained profit. Now we need to go and add back the retained profit. We add back what shouldn't be deducted. So we add back to the retained profit last year because this happened last year. So 100,000. So the machinery now has been added from 1 million and now added by 100,000. And by now your machinery is 1.1 million already. The second one is to rectify the prior depreciation expenses that were understated. And remember that 100,000 that you have already included, if you provide depreciation, it would be 100,000 divided by 10 years, right? The extra depreciation that need to be restated. The extra depreciation is 10,000. And that was for the prior year, it would be 10,000. Why 10,000? 100,000, which is the portion of import duties that are part of the initial cost, and divided by 10 years. Divided by 10 years means you are using the expected useful life, and here is 10,000. And this is to adjust the last year's retained profit with the depreciation. We cannot go and debit depreciation last year to the retained profit. What we can do is to reduce the retained profit with the depreciation. So this is actually the prior year depreciation that you are trying to restate or add it. Yeah. Okay, that was the second one. So class, do you have any question on that before I proceed to the second journal for the depreciation? Anyone?
Okay, madam.
Yeah, Izudin.
We want to fix the amount at current year 2017, is it?
This one is for first for the prior year. This one is for the current year. Because the one for the prior year, you need to make adjustment. Why? Because it has wrongly charged the depreciation. So you go and add back to the accumulated depreciation. Since accumulated depreciation was under provided by 10,000 due to the import duties. Okay, Izudin.
Got it, madam. Got it.
Okay, the second one is to recognize the current year depreciation. So you are not going to continue making the same mistake in the current year, right? So now in the current year, you will go and rectify the error. You have done this, right? So at the same time, depreciation expense in the current year. This one is in the current year. will also be now be 110. Why 110 class for the current year? Since it is 1 million, the cost, the purchase price, plus 100,000, the import duties. This is the correct initial cost. You have 1.1 there, right? And then divided by 10 years. So you will have depreciation expense 110,000. So in the current year, your depreciation shouldn't be 100,000, shouldn't be 10,000, but should be 110,000. Since we have correctly recorded the import duties in the second year. So this is the purchase price. This is the import duties. So the initial cost, or the actually not initial cost anymore, that is the cost of the asset, is 1.1 million. 1.1 million, as I mentioned, was 1 million plus 100,000. Now divided by the expected useful life 10 years, and that was for 1 year, 110,000. So in the prior year, the depreciation was wrongly charged by 10,000. But in the current year, you charge the correct depreciation of 110,000 because you have charged depreciation. Yeah, the issue here is that you have charged the depreciation, and that was just being understated. It is not the same as the case where you do not provide depreciation at all. So do I make that clear to you, class? Hello?
Yes, madam.
Okay. Clear, very clear. Okay, good. Next, we go to the explanation. Do you know or not, when we do the journal entries, that is even easier for us to write the explanation. So now I go on writing the explanation. Okay. So the first explanation is that you need to talk about the retained profit brought forward that you must adjust. Remember just now we do the journal entry, we go and add back the retained profit, right? Do you notice that where we go and add back the retained profit? So that one must be written in sentence here. So retained profit brought forward should be added back with the prior year expenses. Here that was the journal entry that we did just now. Debit machinery, credit retained profit. So when you credit retained profit, you add back the import duties that were wrongly expensed off in the prior year. So that was the first one. The second one is to show the reduction of the retained profit of 10,000 in respect of the depreciation understated. That refers to the second journal entry. Remember, we debit retained profit and we credit accumulated depreciation. That one is to actually reduce the retained profit since previously depreciation was being understated. You provide, but you provide that at a lower amount. The next one is the import duties. So remember when the import duties were being capitalized, now the cost of machinery should be increased by 100,000. Meaning that from 1 million increased by 100,000 increased to 1.1 million. So the cost of increase by 100,000 to 1.1 million. That is referring to the cost of machinery. Okay, that was the explanation for the rectification of the prior year error. So what happened to the current year? Because current year also, we have to make adjustments. So in the current year, the additional depreciation expense of 10,000 has to be added and provided in the SOPL, right? Or you can also mention the current year depreciation expense charge was 110,000. You can either say the additional depreciation is 10,000 and you charge in the SOPL as an expense. That is one way of explaining. Or you can straight away say the current year depreciation expense of 110,000. Remember our last journal entry has to be provided in the SOPL. So that was to explain the accounting treatment. It is quite difficult to explain the accounting treatment without doing the journal. So my suggestion is that you do the journal first. Okay, so this was the one that we provide for the current year. And remember that was actually an additional depreciation of 10,000 to be added to the 100,000 that was being provided. Okay, now next one, you asked to calculate the restated opening balance of retained profit. Retained profit here is the one in the statement of changes in equity, which is one of the column that you need to show in the statement of changes. So this is just the extract statement of changes in equity, concentrating on retained profit. So the beginning balance was given in the question. This 3 million was actually here. This one, 3 million. So that retained profit now need to be adjusted. You need to go and rectify the error. So what you need to do is, number one, you have to do the adjustment that affect retrospective adjustment. So here, whatever that you adjust in the retained profit here should be whatever that needs you to adjust retrospectively. For example, adjustment for changes in accounting policy may have also affected the retained profit, but here no information about accounting policy or changes in accounting policy. So what happened here is just about error, and there were two errors. One error is the expenses overstated. This is for the import duties, and since you say that you go and debit machinery and you credit the retained profit, so means that you are adding to the retained profits. Remember the journal entry, the second journal entry, you credit retained profit 100,000. So therefore your prior year adjustment, meaning that adjustment in 2016 or in the 2015, 2014, if that prior year errors are more than 1 year. So you go and plus the back with the import duties because expenses were overstated. You go and add back to the profit. The second one is the depreciation that has been understated. So if the depreciation that has been understated, it means that before this, your retained profit was somehow overstated. So now you need to go and reduce the retained profit with the depreciation that has not been provided correctly in the prior year, that is 10,000. And therefore, your restated balance before you go and add up with whatever profit for the year or with the deduction of dividends whatsoever, you will stop at this figure, which is 3.090. Then only you will proceed with adding with the profit for the year, adding with other items to the retained profit. But in the beginning of the year, you make the restatement of the retained profit, because for prior year adjustment, the adjustment is to adjust retrospectively, which is retrospective restatement for the error. The prior period error, the adjustment is doing the retrospective restatement. Okay, and you asked to also calculate the revised carrying amount of the machinery. So machinery will be presented as PPE in the statement of financial position. When you ask to calculate carrying amount, you need to understand this is cost minus accumulated depreciation minus accumulated impairment loss. And in this question, no information, so assume cost model is used. So what you need to do is you need to go and revise or restate the correct machinery carrying amount. So for the cost of the machinery, it is not 1 million, but it is 1.1 million, because we have now correct the import duties that was treated as an expense. We add back to the machinery. So that was the cost. The accumulated depreciation would be, before this you provide 200,000 depreciation, right? And now the figure, why 200,000 class? When was the asset being purchased? Do you notice that?
2015.
2015. So you have provided depreciation and in 2015 and also in 2016. 100,000 in 2015. 100,000 in 2016. So here 100 and plus 100. However, you notice that it has been under provided. So it has been under provided. So therefore, what you do is you go and add back the depreciation. You add back the depreciation, the one in the prior year and the one in the current year is 10,000, right? So the depreciation 200,000 plus 10,000 plus 10,000. So it is going to be 220,000. 220,000. So the first depreciation is 30th of June 2016. Yeah, 30th of June 2016. 2016 is, at first it was 100. Second depreciation was 2017. You provide also at 100. But this is not enough. Why not enough? Because import duties was not included. Now, since you have included the import duties, you add back the 10,000 extra depreciation or additional depreciation to the accumulated depreciation. Accumulated depreciation here is for 2 years. 100,000 in 2016, 30th June 2016, and 100,000 in 30th June 2017. That 2 years. But you must make sure that you also add the import duties effect of the depreciation. The import duties was 100,000, right? You add to the cost. So therefore, the depreciation impact is 10,000 in 2016 and 10,000 in 2017. The total depreciation is no longer 200,000 but becomes 220,000. And with that, your restated carrying amount is 880,000.